Hello, good morning, everyone. Welcome to our morning market update. It's Monday, March 20th of 2017. This is George Papazov, owner, founder, and trader here at Trade Pro Academy. I want to take you through an awesome update. Hope you've had a great weekend. Hope you've had a chance to relax. I got an exciting guest here in the man cave. He's only agreed to come in here under the condition of anonymity, so we're not going to say who it is, but it might be Warren Buffett. It might not. It's not. It's my good friend. Those of you in the group, he'll probably introduce himself there. But for today's update, let me take you through a few things. So over the weekend, the healthcare bill from Trump faced a little bit of opposition. That's going to be an interesting thing to follow for today. Markets are down a little bit weaker. Let me get the notes for you. I had them printed out and posted here, and then somebody complained about me being a tree killer or something along those lines. So here I am doing it digital. Hope you're happy. In Asia, Japan closed even, or Japan markets actually closed. Hong Kong up 0.8%, China up 0.25%, India down 0.4%. In Europe, markets are right across the board. So London down 0.2%, Paris down 0.4%, Frankfurt in Germany down 0.4% as well. Somewhere between 0.25 to a half percentage point in the European markets. And futures this morning, Dow is down 0.1%, S&P down 0.2%, NASDAQ down 0.1% as well. Crude oil continues to get hammered, 1.3% down to 48.69. For today's level, watch for that price to get in the 47s. That should be some support on those contracts, about 47.5 to 47.75. That's a great buying opportunity. The first 20 cents within an even pointage or an even dollar level tends to be support. So in this case, it'd be 47.80 to 47.75 would be a great opportunity to get long. Remember the 30 cents rule at the 2:30 p.m. close in oil futures. If they're within 30 cents of an even number, they'll get there. So if it's trading 47.70 around 2 o'clock, great opportunity to try that buy and get it back into 48 into the pit close at 2:30. There's a trade pro tip coming to you live and free. All right, gold is up 0.2% to 1232 half, and 10-year treasuries are flat at 2.5% on the yield. There's a lot of confusion out there still, and I'm getting a lot of emails from you guys. So if you're going to address this on today's morning market update, the Fed raised interest rates. Why is gold going up? And why did the markets react by going up? Well, it all has to do on the trajectory leading up to that interest rate hike, right? An interest rate hike wasn't a surprise. It was a 98% chance probability or 98% probability that they would hike rates, and so it happened. There wasn't a surprise there. The real surprise was leading up to that FOMC meeting, the Federal Reserve, all the members came in there and started speaking hawkish language. Hawkish mean that they're bullish or they want to increase interest rates. And think about this. Everyone went out and said, yeah, it's time. The economy's overheating. We've waited for too long. It's time to hike interest rates. That's the kind of language that came out. Lyle Brainard, who's the FOMC voting member, she's probably the biggest dove. A dove basically believes in lower interest rates for longer and more stimulus, more free-flowing money into the economy. Even she said, yeah, we're getting ahead of ourselves here. It's time to raise interest rates. That was the tone. And then when it came time to it, Janet Yellen went on the wire and said, well, we're going to raise interest rates because the economy's bullish, kind of. The labor market's doing all right, sort of, but we're not going to raise too fast. We're going to play it safe. And she gave the biggest dovish message of them all. So everyone got taken aback a little bit. That's the reason that the market reacted the way it did. It didn't go up because of the rate hike. It went up because the way Janet Yellen was speaking probably suggested they're not going to hike as aggressive as they wanted to. The dot plot showed the same thing. In 2018, the path of increase for interest rates weren't as high, and all the assets started to reprice that and start to correlate. What did that mean? Dovish outlook basically means pop in gold, pop in equities, all right, and a drop in the US dollar. And that's exactly what happened. All right, on Sunday, just a couple hours ago at 6 p.m. on Sunday, it was really interesting to see the market open up and get hammered 6.5 points right off the get-go. It's very low volume. We were doing our Sunday analysis update at 8 p.m. Eastern for all of our subscribers, and that came to their attention. We're like, look at this, the market's getting hammered on the open. And I told them, guys, let's just take a step back. It's 13,000 contracts. I could probably trade that. That was kind of the joke. On 13,000 contracts, the thing was just getting hammered, 6 points down. Well, overnight, we didn't really establish a new low. So what we're going to look for in today's session overall as traders is, can we start to take out some of these lows? You would imagine coasting up at this high in the equity markets, there's a lot of sell stops waiting below. And this is a dynamic a lot of traders miss out. If you have a long position, you're not a buyer. You're a seller waiting to happen. How are you going to get out of your long? You're going to sell. Whether you're going to sell higher or sell when you get stopped out, you're still a seller. Don't forget about that dynamic. Got a ton of longs. They start to feel a little nervous as we can't attack new highs. We're getting into the weaker 6 months of equities. At the beginning of May is when, from May to about August, equities tend to go sideways to weaker. and no one can forget the August and September crashes that typically happen. So starting to be a little bit of fear, starting to feel like we've gotten too far too fast. Watch out for that. I think we can start press some downside price. We can shake out some of these buyers out of their trends. Today, one of the big news items at 10 a.m., FBI Director James Comey is due to testify. He's going to talk about two things. One is the Russian involvement in the U.S. elections, which I think is total BS. But hey, if they have data and evidence, who am I to argue? And the second thing they're going to talk about is Donald Trump tweeting his wiretap allegations over Obama. And when Donald Trump got pressed, hey, how do you know that Obama wiretapped your phone? He said he heard it in the media. Isn't that funny when he just bashed them the whole time? And every conference he bashes the media. Interesting things to come. That'll create some volatility for sure. Watch that at 10 a.m. So what I would suggest at 10 a.m. is if you're going to day trade, look for some opportunities to ride, look for some momentum. But if you haven't traded volatility and you're more nervous of it, sit on the sideline and coast a little bit because it could get real wild out there. It'll be the wild, wild west at 10 a.m. If there's any new info that surfaces from James Comey, the market will rush to reprice that. You can see some big moves and good profit opportunities. Our subscribers, of course, those of you that are here today in the room, we'll trade that together live. One last news item. G20 finance ministers officially released their communication. That meeting wrapped up this weekend and started on Friday. And what the interesting part was that even though they agreed that they're against competitive devaluation in the global markets, they omitted the language promoting the free trade. All right, and that's based on the threats from Donald Trump and his administration, his policies. So that was a win for the U.S. at the G20. As small as it is, it's still a win. That's interesting to watch. All right, guys, that's your calendar. Today at 8:30, we had Chicago Fed National Activity Index. 8:30 a.m., we had Fed's Evans speaking on monetary policy. 1:10, we have Fed's Evans also talking on the same front for monetary policy. 1:10 p.m., that's going to be volatility. Remember, now what we look to see is how will Fed members, what kind of language will they use going after that hike, right? Jan, it was very hawkish, and so were they. A bit of a dovish interest rate hike. Now let's see what the language is, and that could kind of start to give us an idea of how to reprice future interest rate hikes. Right now, we think 2 to 3 more left for the year. I think probably 2, and that's expected in June and September or December. All right, so guys, watch out for that. If you guys have any questions, pop it in the comments box. Now I want to tell you one last piece of info before we go. Tomorrow, Tuesday at 8 p.m. Eastern, you got an opportunity to come out to one of our biggest webinar events of all year. And I wouldn't say that unless it was true. It's true. I'm not going to do a bigger webinar than this. The reason being, prices are going up. All right. And whenever I say that, I know you get goosebumps and the hair stands up on the back of your neck. But here's why. When there's a price increase at Trade Pro Academy, we also believe that there has to be a value increase. All right. We've increased the value exponentially, and the price increase is nowhere near to what you're going to get in extra value. So I want you to come out tomorrow and check that webinar out. There's going to be a lot of updates. We're going to announce 2 new products and a new pricing structure model. And the biggest benefit to you is if you sign up before the end of March, you're going to get a 40% off discount for a lifetime. All right. Nothing's for life except the diamond. All right. But this is 40% off for your whole life. If you come out tomorrow, it's going to be a massive deal. You're going to get a lot of value. Come out and check us out. Click the link in the description box or go to tradeproacademy.com/launch. LAUNCH, not lunch. That just made me hungry, but launch, LUNCH, at tradeproacademy.com/launch. And then sign up there. It'll be at 8 p.m. Eastern. We've got a lot of stuff to announce. I hope you join us. It's going to be your last chance to pay today's pricing for tomorrow's value. And as traders, where do you get that opportunity? Not in the market. Take care, guys. Have a great day. I'll see you tomorrow at 9 a.m. If you have any questions or comments, put it in the comment box. Subscribers, give me 2 minutes. We're going to reconfigure the equipment. We're going to look at our daily levels, talk about the open, and trade together in the room. All right, guys. Take care. Have a great day. And Warren Buffett says hello over here on the left, but it's not Warren Buffett. It's a friend, but he's shy to go on YouTube. I don't blame him. He's not really he's not camera appealing. I'm just kidding. Take care, guys. Have a good day. I have to go with the cheap shot.